In the stock market, the trend is your friend. A stock going up has a better chance of continuing to go up. Newton's first law, an object in motion tends to stay in motion. But trend is a subjective word. For a short-term day trader, that might be how's a stock performing over the last few hours. If you're a swing trader, you might be looking at the last few days or weeks. For a long-term investor, you might be looking at a period of months or even years. And if you want the best odds of making big and fast gains in a stock, you want to align these different time frames. And I'm going to show you an easy way to do just that. Now, this is a daily chart of Nvidia stock, and I've got 3 moving averages on that chart. These are 3 very common moving averages used by most investors, and that is the 20 period, the 50 period, and the 200 period moving average. Now, in an uptrend, a stock that is moving higher, these should be stacked accordingly. And I've painted them red, white, and blue just so it's easy to remember what order we want them in. But you should see the 20 above the 50, above the 200, and all of them sloping upward. If that is not the case, you do not have a strong uptrend. It's easy to see when it's going well, but what about when things turn? Well, what I'm going to show you now is how to align your time frames and how entering a stock when the short, medium, and longer term pictures are all lining up and shifting directions. So let's just zoom back in here. This was the 2022 bear market. Everything went down. Nvidia was not spared. It fell from a split adjusted price of $32 down to about $12, got murdered. But again, what we want to see is the period where these moving averages are all sloping upward in the correct order. So again, went the red, white, and blue, 20, 50, 100. And right about in here, this is when things really lined up for you, because while they were properly stacked over here, again, you want them all sloping upward. If you look at this blue 200 day, right around here, late February, early March 2023 is when those finally lined up on the daily chart. So what you're going to do then is go down or go up to a weekly chart. We're going to look at the same time period. Again, had the big pullback. And then notice right about here, February 27th, exact same time, we had the 20-week, the 50-week, and the 200-week moving averages all properly aligned. And I guess it was really the second week of March finally beginning to turn upward. You step back even further and look at the monthly time frame. We'll go to the same period in time, look for that pullback there, and then these were essentially trending upward by, again, right around February. So the stock is above the 20, above the 50, above the 200, all sloping up, all pointing in the right direction. So by aligning your time frames and getting in, waiting for short, medium, and long-term picture to all line up, it would have got you into the stock about here. And if you zoom out to a daily chart, you can see that would have put you in this stock right here at about $25 a share. You wouldn't have caught the low. It's nearly impossible to do so. But you waited until the daily time frame, the weekly time frame, the monthly time frame were all going in your favor. Let me take this at a logarithmic scale. And by doing so, even though you missed the first little $10 move here, you were in for another 500% over the next year and a half to 2 years. Now, if you're a technical trader like me, if you rely on chart patterns and support and resistance, this is going to be even more powerful, and I'll show you what I mean. Now, this is from left to right, a monthly, weekly, and daily chart of GLD, the gold ETF. And I've been extremely bullish on gold since here, early 2024, and I want to show you why. So I'll stretch these over to the sides. We're just going to be looking over here on this chart on the left, this monthly chart. And when we do, you can see a just textbook, decade and a half long breakout pattern here in GLD. And if you're not familiar with this pattern, I've got a video on my channel. It's titled, I Can Turn Anyone Into a Profitable Trader. Click that, give me 15 minutes, and I promise this will all make sense. But you can see this beautiful shallowing pattern here that took place between about 2011 and 2024, all leading up to this big breakout moment right over here. And as you can see, like January, February 2024. But then I want to step back, and we're going to go to a weekly chart. And when we do that, around that same time, it was coming out of a similar pattern in a weekly time frame. And you can see here, this one formed over about 4 years, between 2020 and 2024. And it got a little bit squirrely in here, but came up, tightened nicely, shallowed beautifully. And just like the last example, was breaking out cleanly here at about 196, 197. You can go in even further on a daily chart. And again, we're going to go back to that time here, February 2024. And you see a very similar pattern here on the daily chart that formed over the last 10 to 12 months. Again, the pullback, shallowing, little squirrely, shallowing up here, and then breaking out above that same level. So when you have a stock, a commodity, in this case it's gold, breaking out from a 15-year monthly base pattern, a 4-year weekly base pattern, a 1-year daily base pattern, you have all the stars aligned. So you've got both short-term traders and swing traders. You've got position traders. You got long-term macro traders. Everybody all at once is bullish on gold, and all that buying is what leads to these big super cycles like we've seen in gold. You can see here, GLD has gone from, call it 200 up to 316 just a little over a year. It's about a 60% move in gold, which is a spectacular move in a commodity like this. As you notice over here on the daily chart, it never even went against you. You bought here on that breakout, immediately surged in your favor, and then does what stocks typically do, makes a big run, consolidates, makes a big run, consolidates, run, consolidate, run, and here we are consolidating again. So multi-time frame analysis is going to do wonders to your investing returns. Sure, you can make money day trading. Yes, you can make money swing trading or long-term trading. But when all those time frames align, when every investor all has the same analysis, the same outlook, that's when massive buying can come in and cause these big meteoric rises in a stock or commodity. Now, if you haven't already done so, click the subscribe button down over there in the corner. That way these videos will show up in your feed. We try to give stock tips, strategy advice, and anything that we believe is going to benefit you financially every day here on YouTube. So do me a favor, subscribe to that, and I'll see you in the next video.